Welcome to NYSE Live, everyone. I'm Kristen Scholler here in studio above the trading floor. Well, investors have accepted the election results. Former President Donald Trump will return to the Oval Office for a non-consecutive term, this time as the 47th President of the United States. In the wake of his decisive victory, the stock market surged Wednesday because it does crave certainty. Dow Jones Industrial Average ended the day at more than 3.5%. The S&P 500, meanwhile, jumped 2.5%, both indexes ending at record highs. Well, this morning, stocks are set to return to all-time highs, pointing to fractional gains at the open. And as we continue to cover investors' response to Trump's campaign agenda, let's take a look at what is on tap in today's show. Well, sector rotation is underway, with small cap stocks and bank shares outperforming in the wake of those results. Wall Street veteran Kenny Polcari will join me in studio to cover the Trump trade. Plus, mega cap technology names face a new regime under President Trump. Well-known Wall Street analyst Gil Luria will join for the impact on the world's most valuable companies. And the Space Force was something former President Trump enacted while in office the first time. Astronomer Neil deGrasse Tyson will have more on the future of the outer world. All right, well, as we await that market open, I do want to welcome my first guest, Kenny Polcari, managing partner at Case Capital Advisors. Kenny, great to see you at the stock exchange this morning.
Thank you. It's a pleasure to be here. For me, it's like coming home after spending 40 years down there in the trading floor.
Yeah, I know. Many happy faces to see you and have your presence here today. Let's talk about this Trump trade. Stocks set to open at record highs. What's behind it?
It was an amazing day yesterday after the election results. But to your point, you said it on the intro, right? It's about clarity, because the market just wants to understand where we're going, right? It remains volatile when it's unclear, but once there's some clarity on the market, good or bad, the market can function. In fact, it responded to the election results in a very positive way yesterday. I think part of that was just relief that it was over and it wasn't stretched out over 4 or 5 days. Like a lot of people, there was a lot of talk that maybe this was going to take days to resolve. In fact, it didn't, and so I think the market was celebrating that fact. I also think the market was now celebrating the fact that this new administration and what to focus on and what is going to benefit and how should investors prepare themselves. But don't forget, it's also a big week. We get the Fed today too.
Right.
It started yesterday, it's today, so that's also playing into market action.
So when I checked the Fed funds futures this morning, 97+% chance that we get a 1/4 percentage point rate cut today. I'm assuming you're part of that camp as well.
So no, actually, I'm not. No, because I thought they were very aggressive in September when they cut 50. So I was looking for 325 cuts this fall. September, November, and December. They did 50 in September. So I'm in the camp that they should do nothing this month, and they should wait and see, and then they can play catch up in December if they have to. But the market is expecting a 25 basis point cut. I think that's what it's going to get. Because they went into blackout mode, and then the Wall Street Journal, as they would typically do when the Fed's in blackout mode, comes out with an article, and Nick Timrose came out with the article arguing for that 25 basis point cut and why it's necessary. So I don't think the market's going to be surprised. I think that is exactly what we're going to get.
Right, and we know that the Fed does like to broadcast that, sometimes often through the Wall Street Journal reporter, to make sure that the market can expect it. I want to hear from you, Kenny, what you anticipate we might hear though from the Fed chair. I'm sure he's going to get questions this afternoon during the press conference about the Fed's independence with the new president set to take office.
That's right, and the Fed should remain independent, right? That's one of the key things between the executive branch and the Fed, that the Fed needs to remain independent. I don't suspect that he's going to say anything other than he remains independent, that he's not going to be swayed by any particular administration, which is true. He should not be. He should really be just focused on what he needs to focus on, the labor market and inflation. So I think what you're going to hear is that inflation is trending lower, which it is. It's not completely resolved yet, but it is trending lower. And then he's going to worry about maybe some weakness in the labor market. And I think that he's going to be able to highlight Friday's weak NFP report as a reason that we need this rate cut, because he wants to make sure the labor market doesn't completely collapse. I don't think it's going to. I think the other data suggests that the labor market is fine, but if he's going to cut by 25 basis points, he needs to be able to couch it in a reason.
Let's talk more about the repositioning that's happening. People looking at their portfolios, maybe adding to small caps, adding to bank shares in the wake of this certainty that we got.
So the banking and some of the other stocks sectors are going to be a direct result of less regulation. Small caps is a different argument. Small caps is an argument about, lower rates, because small cap companies tend to borrow money to fund their businesses. So if rates go lower rates actually help them, right? The other thing that small caps are typically U.S.-centric companies, right? They create in the U.S., they sell in the U.S., their clients are U.S., is that they won't be affected by any tariffs if, in fact, there are going to be tariffs. I'm not sure they're really going to be tariffs. I think he's using tariffs as a leverage play. I'd be surprised if across the board we see that, but that would be the reason that we see some movement into the small cap names, as well as people anticipate kind of what the administration may or may not impose.
It's interesting because in the wake of these results, the inflation word, the I word, if you will, which has been such a focus since 2022, seemed to come back in focus.
Yeah.
What does the Trump administration, potentially a red wave in D.C., mean for inflation?
Well, so inflation is probably going to rear its ugly head again, no matter who was in, whether it was a Democratic administration or a Republican administration, because both have promised to spend more money. So I'm not necessarily thinking that inflation is going to go lower. In fact, I think what's going to happen is that it's going to rear its ugly head, and the Fed is then going to move their target from 2% to either 3 or 3.5%, that they're willing to have inflation run at the 3 or 3.5% level, just because of all this government spending that's going to happen. And that would have happened under either administration. So I think you have to be careful how you couch that, saying, well, it wouldn't have happened under a Democrat. It would have, because they were prepared to spend as much money as well. I'm not arguing one side or the other. I'm just saying, as an investor, you have to assume that we're probably going to see inflation rear its ugly head. Here's the point, though, that you have to be really concerned about. Are they going to be able to control it to the 3.5% level that it's probably going to go to, or are we going to see it spin out of control again the way it did when we saw inflation surge up to 9% in 2022?
So what does this mean for American families, many of whom were frustrated and elected Trump because of that?
That's right. But listen, Trump, from a regulation and taxation side, right, the Republicans will keep taxes lower, maybe even cut taxes. So that would be a benefit to not only to Americans but to investors. But also then try to grow the economy, right? So get the economy growing faster than its 2% annual rate, because then that will also help. It'll help wages. It'll help the economy. It'll help bring down inflation.
Kenny, what else is on your radar as we await this market open?
Oh my God, there's so much on the radar. Really, what today is on the radar is the Fed. And then beyond that, it's the end of earnings season, right? We got another couple of weeks of earnings season. And we've had an earnings season that's actually been okay. We've got about 80% beat rate, which has been very, very interesting. And then the guidance forward has been mostly robust. So I'm excited to hear more of that in the next 2 weeks.
Kenny Polcari, managing partner at Case Capital Advisors. He's going to be sticking with me after the market open as well. And you're here for Building Homes for Heroes, is that right?
No, I'm actually here for the Headstrong Project, which is another veterans organization. We have a big gala event tonight where we treat veterans that suffer from PTS.
Yes.
It's interesting that you guys have this happening today. I think it's great around Veterans Day that we're focused on veterans.
Leading into Monday. We're so happy to have you, Kenny. Thank you. He'll be with us throughout the show, but after the break, we'll take a closer look at what changes could be coming for big technology as Donald Trump is elected 47th President of the United States.
Hello and welcome to today's edition of The Exchange, brought to you by the New York Stock Exchange. I am live on the floor with my friend Simeon Hyman. He's Global Investment Strategist at ProShares. Simeon, thank you for stopping by.
Thanks for having me.
I can't believe I'm saying this. We're coming up on the 3-year anniversary, of BITO, B-I-T-O. That's the ProShares Bitcoin ETF. How's it going?
You were here with me. October 2021.
I remember we were staring at the screens behind us. We were excited.
The volume was off the charts. I think we had about $1 billion in the first 4 hours.
Yeah.
The fund has continued to prosper, and we keep moving. We've now have the most crypto-linked ETFs as in addition to BITO.
So let's stay on the ETF. You know, we talk a lot about the benefits of the ETF wrapper. Are there benefits to the idea of Bitcoin in an ETF?
Sure. Let's start with the ETF itself. You can buy and sell in a brokerage account. You don't need a wallet. Now you have the futures, which are a regulated space as opposed to the loosely regulated spot markets and third-party providers, and you have a qualified custodian. But you bring up a second point, which is important, the distinction between our futures-based ETF and the spot Bitcoin ETFs. BITO is a 40 Act fund as opposed to the spot Bitcoin ETFs, which are 33 Act funds. And some folks do want a registered investment company or a RIC alternative. You also have options on BITO. Very important. There aren't options on the spot, guys, and it's a robust spot market, the largest of the crypto link space. And again, that regulated futures market is important.
It is. And, as you mentioned, the options market, I mean, boy, options have just been booming this year. We're seeing it messaging traffic. I want to take us forward, though. So it's been 3 years since BITO has been listed here at the New York Stock Exchange. What else have you been working on over that time?
We're up to 10 crypto-linked ETFs in our suite. We're super...
Good morning and welcome back to NYSE TV Live, everyone. I'm Kristen Scholler here in studio above the trading floor. Well, as we await the opening bell, we know industries and sectors across the board will need to adapt to a new playing field when Donald Trump assumes the presidency on January 20th. Big tech is included. Well, Gil Luria, Managing Director at D.A. Davidson, joins me now for more. Gil, it's great to have you on the show this morning. We are talking about so many different sectors of this market and, of course, what a Trump administration means for them. I see a technology name set to rise at the open today. What is tech like under Trump?
Well, by and large, the benefits that you've been talking about are benefits to the technology companies as well. So for the taxpayers, the tax rates will either stay low or go lower. In terms of the regulatory environment, it's been very restrictive on the ability to conduct mergers and acquisitions. That should loosen up. That should have a very big impact up and down the market cap scale. But then finally, there's some subtlety to the conversation about the largest technology companies because both President-elect Trump and Vice President-elect Vance have made some strong statements around the biggest technology companies. There's been specific disputes with some of them, and we're going to have to see how they are treated once this administration takes office.
So you cover the stock performance, the fundamentals of these businesses. Gil, do the fundamentals of any of these technology companies in your purview change?
To the extent taxes go lower, that's going to help a lot. Again, the ability to make mergers is something these companies have been almost locked out of for the last several years. Let's not forget, Amazon couldn't even buy iRobot for $1 billion. Amazon's a $2 trillion company, and that was blocked. And underneath that, Adobe's acquisition of Figma was blocked. Adobe's not even a mega cap. And so the whole ecosystem has been stuck. That trickles all the way down to venture. So if we get back into a world where companies can buy other companies again, that will drive more growth, it'll drive consolidation, it'll drive more capital markets activity, which will trickle all the way up and all the way down in terms of more economic activity.
It's interesting, Gil. We talk so much about the most valuable companies out there. All of them technology names. They drive the overall direction of the S&P 500. I think collectively that sector makes up 25%. That is its weight in that market cap weighted index. It sounds like a looser regulatory environment, specifically when it comes to deals and the VC market, would be beneficial for this tech space going ahead. Do you expect over time that it will continue to gain share within the broader market?
Yes, for the simple reason that almost all productivity comes from software. Even productivity in other sectors comes from better and better software. And let's not forget, we're living in an era of huge change in the productivity based on new AI-driven software. So generative AI is still in the experimentation stage, but as it gets deployed and becomes part of other software products, it's going to drive productivity not just in the tech sector, but beyond. The gains will mostly accrue to the tech sector. And as we've seen so far, mostly to just the handful of companies, the Mag 6 really, that get most of those gains because AI specifically lends itself to the largest scale in order to make progress. So yeah, we expect the weight of technology to increase. and specifically the weight of the Mag 6 to possibly increase as well within that.
I want to get your take on semiconductors. I know NVIDIA is a company that you follow closely. Of course, it is its own unique subsector within the broader tech landscape. Can semiconductors find ways to become more competitive and more efficient in this process?
So there's a huge boom in data center construction right now, which is driving mostly NVIDIA. And again, that's going to continue at least in the short term, because that is how those other companies, Microsoft, Amazon, Google, Meta, are creating all these AI tools, is in NVIDIA populated data centers. So that boom will continue. Broadly speaking, the other thing to look at, though, is a tariff regime. Any tariff regime, any disruption to the global flow of goods could be an issue, starting with NVIDIA and then flowing downstream to all these other companies, because our supply chain for semiconductors is very global. The parts, the commodities come from a lot of different places. They're constructed, a lot of them in Taiwan, which then gets distributed from there. Any disruption to that global supply infrastructure based on tariffs could disrupt all of these companies, starting with the companies such as NVIDIA.
Optics-wise, how do you expect the chief executives of these large technology companies to approach the Trump administration?
Well, I think we had 4 years of tuition around that question. And I think the CEOs paid their tuition, learned their lessons. And if you notice, they all tweeted or put on X congratulatory remarks to the president-elect. This often just gets down to a personal relationship, and these CEOs being respectful and positive towards the president. Let's not forget he's had run-ins. He had a run-in with Facebook at the time when they deplatformed him. He had a run-in with what was then Twitter, which deplatformed him until Elon Musk came back and brought him back in. So he has some animosity there. There have been accusations that Google's searches have been skewed against him. So these CEOs are going to want to be positive, address those concerns, and make sure they're on the same page with the president himself before they can address other regulatory concerns. And I believe they all understand that and are proceeding that way.
Gil Luria, thank you so much for joining, of course, Managing Director at D.A. Davidson.
Thank you.
All right, well, stay with us, because up next, I'll bring in my colleague Trinity Chavez with more as we await the opening bell.
Hi, I'm Isabella Bizone with Fixed Income in Focus. Today, I am pleased to have with me Laurent Pauillac, Group CEO at Millennium Advisors. Laurent, in the world of credit, we've seen a lot of change in market structure in the last 10 years with the growth of algo trading and all-to-all platforms. How have these new developments affected liquidity in fixed income markets?
Well, first of all, thank you for having me, Isabella. You have run a very good program. I'm pleased to be here. I'm going to share my perspective as a prop trading firm that has acted as an alternative liquidity providers in fixed income. Yes, market evolution has really transformed our markets for the last 10 plus years. With the advance of algo trading, we've seen a lot more participants. Now, every single investment bank and have an algo desk, as well as alternative liquidity providers like prop firms are very active in the algo trading space. With more data and the usability of AI in those markets, algo trading firm has created a lot of value. But what we found is that the liquidity they provide is really robust, mostly in a low volatility environment. All-to-all platforms have also expanded, and there's more than one platform today, and it's really blurred the line between the buy side and the sell side. But again, liquidity has been strong, mostly during low volatility environment. At time of market disruptions, that's where we see the weakness of these evolutions. You know, we all say that in the credit markets, liquidity is a mile wide and an inch deep. And at Millennium, we approach it a bit differently. We use algorithms to help us making decisions, but our model is really more trader-centric. And we use automations to help our people make faster and better decisions and respond.
Good morning, everyone, and welcome back to NYSE TV Live. I'm Kristen Scholler, here above the trading floor at the New York Stock Exchange. Well, NYSE listed firm CBiz, it's a professional services advisor to middle market businesses and companies around the country, reported its third quarter results last week. That's just part of the story that we're covering, though. On November 1st, CBiz announced that it had completed its acquisition of the accounting firm Marcum in a deal worth more than $2 billion. The company says the move makes it the biggest full-service professional services advisor of its kind in the U.S. And I want to bring in Trinity Chavez now with more on this story. Trinity, good morning.
That's right, Kristen. This move not only marks CBiz's largest acquisition to date, but it also expands its capacity to deliver innovative tech-driven accounting solutions for clients. To dive deep into more of the strategic impact of this acquisition on CBiz's market position, growth potential, and shareholder value, I am joined now by Jerry Grisco. He is the CEO and president of CBiz. Good morning.
Good morning, Trinity. How are you?
Great. Thank you for joining us today. So let's just dive right in. With CBiz now the largest professional service provider in the country, what unique market positions and opportunities do you see for CBiz to expand its client base and service offerings?
Well, as you indicated, Trinity, we are really unmatched in the scope of services that we provide, the depth of our expertise, the industry knowledge across the board. We have, with the closing of this transaction, over 10,000 team members located in 21 key markets across the country. So really unmatched with our national scope, unmatched with that breadth of services, unmatched with that depth of expertise, specifically targeted to that underserved middle market business client.
And how would you say that this differentiates you from your competitors? And how does it strategically position CBiz against other competition that's currently on the market?
Yeah, so we've really been almost 30 years we've been at this. As I indicated, our national breadth with that 21 major markets across the country, we have really strong competitors that are monoline, right? So if you think about traditional accounting firms, we have really strong traditional accounting firm competitors. We have really strong competitors in each of the monoline businesses we do, whether it's benefits insurance or payroll, some of the advisory services, but no one offers that full breadth of services. So I can give you and think about countless examples of meeting with and speaking with clients where we help them for something from a prep for sale all the way through the sale of their business, helping them design the structure of the transaction so that they put the maximum amount of proceeds into their pockets, and then kind of set them up at the back end for success going forward with their estate plan. So there's really no one that can do all of those things A to Z like CBiz.
And your Q3 earnings showed rising revenue, signaling strong performance. So can you share some of the specific factors driving this growth? And do you expect this Marcum acquisition to accelerate revenue further in the coming quarters?
Yes, let me talk about the third quarter first. So really pleased with what we've seen through the first 9 months of the year. If you understand our business, we largely provide essential services. So if you think about all of our clients turn to someone to help them with their accounting needs and their insurance needs and their payroll needs, their health insurance needs, all of the things we do are largely essential. What really propels our growth is a favorable business climate where our clients turn to us because they're expanding their business or they're going overseas or they need access to capital. We can help them, advise them on those things that they're considering. We saw really strong demand, not only in our essential services for the first 9 months and into the third quarter included, but also really pleasing to see those advisory services also remain in strong demand throughout the year.
And tech-driven innovation is central to this acquisition's goals. So how is CBiz leveraging technology to enhance client services and attract top talent? And what role will AI play in your strategy?
Yeah, so we look at AI as an opportunity. Certain others might view it as a threat. But if you think about what particularly many of our more entry-level people are doing, historically that's been largely task-driven work. That work is all being automated, and we embrace that. We're investing in AI. We're investing in the tools to automate and make what we do more efficient. The way that translates to our clients is it allows us to provide those services far more cost effectively. But more importantly, the opportunities it means for our team members is that they don't have to spend their time doing that lower value work, which allows them to provide higher value work to our clients, come up that value chain for our clients, and provide more meaningful work, more impactful work for a more interesting array of clients.
Well, thank you so much, Jerry. He is, again, the CEO and president of CBiz. Thank you for all those key takeaways.
You're welcome. Thank you, Trinity. I appreciate being here.
Now we are going to take a quick break, but when we come back, Building Homes for Heroes will kick off today's session by ringing the opening bell. Stay tuned.
Technology is very important to us. Actually, we are one of the first companies in the industry to fully adopt cloud-based software applications.
Stephen, it is wonderful to have you on Floor Talk here at NYSE International Day.
Thank you. Thank you for having me.
So now, I want to start off by talking about the company. Tell me about Chanyan.
Thank you. So we are Chanyan, short for CYYS. We are China's largest freshly made tea drink company. So we are directly operated. Currently, we have 900 stores across the country with more than 6,000 employees. So we were founded in 2013 in Changsha City from China. So on top of the fresh made drinks, we also offer lifestyle retail products like these ones. So we started offering them since 2020. Right now, it contributes to more than 30% of our total sales. To my knowledge, that is the highest in the industry.
Now tell me, how does technology drive the customer experience?
Technology is very important to us. Actually, we are one of the first companies in the industry to fully adopt cloud-based software applications. Just to give you an example, so people are familiar with the Starbucks apps. There are a lot of functionality in it. So we also have a similar WeChat mini program in China. So for example, if a customer is interested in to buy one of these retail products, they can use our WeChat mini program to search exactly which store has the inventory. And once they find it, they will be able to either to buy it or they can.
Welcome back to NYSE TV Live, everyone. I'm Kristen Schuller here in studio. And in just a few moments, Building Homes for Heroes will kick off today's session by ringing the opening bell. It's a nonprofit organization which constructs, modifies, and gifts mortgage-free homes to veterans. And it was founded in 2006. Well, it's going to be celebrating its 400th home later this year and ahead of Veterans Day on Monday. Annie Pujol, Building Homes for Heroes CEO, is going to celebrate that opening bell alongside Joe McFarland, who is the EVP of stores for NYSE-listed company Lowe's and is also a board member for Building Homes for Heroes. Well, I do want to bring in my colleague, Trinity Chavez, with more as we await this market open. Trinity, I know you're in studio, but we've got a lot to cover today, specifically as it comes to investments and your big shoot on Monday for Veterans Day.
Yeah, I'm very excited about that, Kristen, as we await the U.S. markets to open up for another busy day of trading. But yes, on Monday, we are going to be out on a ship going live ahead of Veterans Day, speaking to many of the people there representing and honoring this impactful day here at the NYSE. Of course, you're going to be here covering it from studio, and I'm going to be there on the ground speaking to everybody there. But again, it's going to be a very busy day here at the exchange. Later on, I'm also going to be speaking with Neil deGrasse Tyson. He's a world-famous astrophysicist. We're going to be talking about all things in the space sector, especially now as we are set to see President Trump take, move into office. We are going to be speaking about how this new administration could impact the overall space sector and what's in store for space investment, Kristen.
I'm very much looking forward to that conversation, Trinity. And as we await the opening bell, we see stocks set to open at record highs. Huge jumps that we saw yesterday, of course, because markets crave certainty, and they got that with a decisive victory by former President Donald Trump. Technology names leading the way today after underperforming a hair yesterday, but still with decent gains across the board. Let's take a listen. All right, we are officially off to the races here at the New York Stock Exchange. Full day of trade. The major indexes right at record highs. And of course, as we see stocks across the board really benefit in today's session, I do want to bring back Kenny Polcari. He's a chief market strategist at Slate Stone Wealth. Kenny, great to have you back in studio, and great to celebrate the veterans as well.
It really is. It's, you know, with the holiday coming up on Monday, this project is actually a great veterans organization. I'm also here for another one, which is a great organization. So it's all very exciting.
Yeah, so let's talk about stocks here, of course, opening at all-time highs. We talked a bit about the sector rotation, but I do see technology names leading the pack today with fractional gains across the board.
Yeah, so I'm not surprised by that. Look, technology, it all participated yesterday. I think the Dow actually was up more broadly than the rest of the market. The Dow's been underperforming the broader market, right? The S&P and the NASDAQ are both up 20+%. I think the Dow is up 15 or 16%. So that was just a little bit of catch up. But I think it's exciting, and I think we're seeing this money continue to move into AI. We saw great results from Palantir the other day.
Yes.
And then Palantir's forecast was actually really what drove the action across a range of tech stocks within the sector. So it's not surprising at all. I think tech is going to continue to play a major role in this revolution that we're in. So it makes perfect sense.
What do you want to hear from the Fed Chair Jerome Powell later today after the decision?
So I want to hear that that he's going to tell us that the labor market is resolving itself, that it's not as weak as maybe he thought it was in September, that he's got that under control, that while they expect inflation to rear its ugly head again, as we discussed earlier, that he doesn't expect it by any means to spin out of control, because he expects if the economy grows at the way the new administration suggests it might, is that we should be able to control it, right, and have a healthy economy without having exploding prices. And so I'm looking for some guidance from the Fed chair about that and what he thinks the future looks like.
Is there anything that he might say that you think could move stocks off the path that they are on, knowing that the Fed is independent of the balance of power in D.C.?
Yeah, I think he could suggest that he sees the labor market weakening and that he's fearful of a recession, which would be negative for stocks. That would be what I think he would say that would knock it off its track right now. I don't think he's going to say that. I think what he's going to say is that the economy remains strong, and he continues to see it remain strong. Like I said, I think it's all going to hinge on what he says about the labor market in terms of kind of how investors interpret what that next move is. I think he's going to leave the door open for further rate cuts. I don't think he's going to commit, though, to anything specific in terms of every meeting they're going to cut 25. I think he's going to say it's all data dependent. He's going to leave the door open, but he's not going to commit.
What does this decision and the impact of the election mean for the bond market?
Well, so I think the bond market's telling you a couple of things, because look, he cut rates by 50 basis points in September, and the bond market has done nothing. Yields have done nothing but go up. Bond prices have gone down and yields have gone up, which is really counterintuitive to what you think might happen. But I think what the bond market is telling us is that it also expects the inflation to kind of rear its ugly head again, muted, not out of control, but that the bond market is expecting that we'll see that with all this government spending that's been promised to spend, is that we'll see that happen. And so I think the bond market is just telling you to be a little bit cautious in terms of being so excited about plowing money into stocks. But look, remember, bond prices and yields have an inverse relationship. As investors sell bonds, yields go up. And so I think part of what you saw yesterday was bond investors were actually selling bonds to plow money into stocks under this new, what's perceived as this new administration and what it's going to mean for the economy. And so that's kind of where we saw a big spike in bond yields yesterday. But I think you just have to watch, where's the line in bonds? Is it 5%? Is that where it's going to find, the market's going to find to struggle a little bit? If bond yields get to be closer to 5%, I think it will.
Does Bitcoin look attractive to you in this environment?
Bitcoin looks very attractive. Certainly, again, under a Trump administration, it would be less regulation. He's very positive on crypto and blockchain. And so therefore, we saw what happened to Bitcoin yesterday. I think it's actually up again today. And so, yes, I think Bitcoin is attractive. But I think as an investor, you have to be careful. You have to look at it, understand its risks, and not necessarily let it become too big a percentage of your portfolio, just as you wouldn't with anything. So I think investors need to kind of be in it. I think you need to be in it depending on where you are in the life cycle is going to dictate how much you're really in it.
I see this is the best post-election rally ever. We've talked about deregulation. We've talked about lower tax rates. I want to talk more about domestic growth.
Okay.
We mentioned the small caps earlier, but what this outcome means for smaller companies and growth here in America.
Well, so if the U.S. economy starts to grow better than the 2.8%, if it does what they suggest it's going to do, then small and mid-cap companies, which are really U.S.-centric, right? They manufacture here, they sell here, their clients here, they're not dependent on what happens around the world. That they will certainly do better. And we've seen that over the last couple of weeks. We've seen money move into small and mid caps. They had been underperforming all year. Now they're starting to play catch up because investors are considering that these are going to be undervalued names that are going to do well in this new administration, especially if we see rates tick down a little bit. Like I said in the other broadcast, that lower rates will help small and mid cap companies as well as a stronger economy.
Kenny, I know many people are happy to see you here at the Stock Exchange today. Thank you so much for making time to join us on the show.
Thank you for having me. I'm happy to come back.
Okay, great. We look forward to that. Kenny, of course, is a chief market strategist at Slate Stone Wealth, and we'll see you soon.
Thank you.
All right, well, one of today's bell ringers joins us after the break as his organization approaches a major milestone. Stay with us.
You think about it, providing energy does improve lives. Your life gets pretty miserable pretty fast if the lights go out, if you can't get the fuel you need to get from point A to point B, groceries don't show up on the shelves, you can't get your kids to school. It's a tough life without energy. And so our mission is to make sure that people have access to the energy and the materials they need to have a great lifestyle, to have a sustainable lifestyle. And over the years, we know that it's going to evolve. The kind of energy we may be providing to improve people's lives may evolve from what we do today, but we're committed to ensure that people have access to low-cost, affordable, sustainable, abundant energy, just like we've done for the last 125 plus years. Pinnacle really epitomizes the perfect opportunity for us because it sat right next to our backbone, our trunk lines. It had a brand new state-of-the-art gathering and processing facility that could process 200 million standard cubic feet a day of gas. And it had plans for another one and the utilities in place for another one. And there's room for even more expansion. So we could do an inorganic acquisition that allowed us to do more organic growth over the long term. And so we were able to buy it at a very reasonable value and create even more value by expanding it over time. Today, we're now processing 50,000 barrels a day, give or take a little bit, of renewable feedstocks with low carbon intensity, and we're selling it as renewable diesel direct to customers at our 76 stations in California and other locations on the West Coast. And we're now starting to build inventory of renewable jet fuel that can be blended with traditional jet fuel and marketed as sustainable aviation fuel. So we're well off to a good start with our Rodeo.
Good morning. Welcome back to NYSE TV Live, everyone. I'm Kristen Scholler here in studio. Well, we saw the opening bell minutes ago. Building Homes for Heroes celebrated the market open ahead of Veterans Day on Monday. And I want to bring in NYSE TV's Judy Shaw on the floor with more. Judy, good morning.
Good morning, Kristen. And yes, I am here with Andy Pujol. Andy is the founder and CEO of Building Homes for Heroes. Andy, it's so great to see you again. Thanks for joining me.
Thank you, Judy. Nice to see you again. Nice to see your audience. Love you all.
Now, you just rang the opening bell. What are you celebrating today?
Oh, it's amazing to ring the bell. What a true honor. But the organization is like reaching new heights never imagined before. I mean, we'll hit 40 homes this year in a single year. We'll hit our 400th home. It'll take place in Dallas, Texas on Pearl Harbor Day, December 7th. We're going to have snow-making machines, Santa Claus, reindeer, 1,000 people in the ceremony. And then next year, our goal is 50 homes in a single year, 500 homes in total, and 5,000 veterans with athletics, academics, emergency funding, financial resources, physical health and mental wellness for those with PTSD and TBI. The charity is booming. We're reaching new heights, but we need you all and we love you all.
Now, Andy, talk to me more about the organization, what you do, and why you founded it.
Well, I was in the search and rescue in 9/11, so this is really home for me. And I sat there in the rubble one night, and I looked around, I saw all the firefighters and EMS workers and first responders, and for the first time in my life, I saw what a true hero was. And I literally broke down in tears. And I have to say, I had probably hundreds of nightmares after that. But I said a prayer that night on the rubble. I made a promise to God that I would serve my country. And 20 years later, I've never taken a single penny. And it's all out of the goodness of our hearts. It's a continuation of all the heroes there today. And I'm happy just to be a small part of them and the heroes who are veterans today. And we have to remember that without our veterans who selflessly served and sacrificed so much, that the stock exchange here may look completely different. It may not exist. Democracy may not exist. They're the root of all that's good in this country. And other charities too, so everyone should be thankful to them. Let's not forget them. Let's continue to love them. I'm sorry I'm talking so fast.
No, not at all. So now, Andy, you just rang the bell, and you rang the bell with Lowe's. Now, this is ahead of Veterans Day, but talk to me about your partnership with Lowe's.
Yeah, well, Lowe's is amazing. Joe McFarland is number 2 at Lowe's. Marvin Ellison's the CEO. They're both big fans of Building Homes for Heroes, and they've now become our 3rd largest donor. But this year, they are our largest donor by far, not even close. And we're not only going to do the 50 homes, 500, 5,000 next year together. But we have some surprises on the horizon, which I really can't really talk to you about. Someone's gonna choke me, but we'll be heading into building our own communities, making our communities and country a better place, and we're gonna be helping with hurricane relief and all other things. The charity's really growing, but again, we do far more with far less than any charity in the country. And now others may debate that, but I'd be happy to debate them. So, just really more from the bottom of my heart, I just want to thank all, and I'm honored. We walked this earth one time, and we continue to do the best we can and be the best we can. And it's really, that's what it is. It's that humility, and that's the root of everything.
Now, Andy, you mentioned that you have your 400th home that you're going to be celebrating very soon.
Yes.
So talk to me about that milestone and what it means to you personally and the organization.
What do I say, what?
Your 400th home, it's coming up, the celebration.
Yeah.
What does that mean to you and to the organization?
I mean, it's an amazing milestone. Can you imagine sitting on the rubble in tears, praying to God, feeling completely helpless, watching heroes all around me, and being at a point in your life where you were never so down, never so heartbroken, and then to reach where we are now at the New York Stock Exchange, to ring the bell, our 400th home, plans for so much ahead. It's a miracle. And Albert Einstein said, you can either believe everything's a miracle or nothing's a miracle. And I've learned to believe through all this that everything's a miracle. And you're a miracle, and we're all miracles. It's just a matter of finding our way. And if we can make the world a better place, and you know what a life we've lived. Not just a legacy, but a legendary legacy.
Well, Andy, congratulations again. Thank you so much for joining me today.
Judy, so nice. Oh, nice, thank you. I'm honored. I'm thankful.
Thank you. Now, Kristen, back to you in the studio.
Judy, thanks so much. A great interview there, of course, after that opening bell ceremony. And when we come back, Neil deGrasse Tyson is going to join Trinity Chavez in studio to talk about his latest book and what the future of the space industry could look like under a second Trump presidency. Stay with us.
At Augury, we work with the largest manufacturing and industrial companies in the world to make their production lines more reliable, more productive, and more sustainable. And we do this by infusing every layer of the manufacturing stack with AI and digital solutions, starting from machine health, which is the maintenance and reliability aspects, as well as process health, which is process optimizations. How do I manufacture quality product? How do I reduce the waste? The energy consumption of my lines.
And speaking of machine health, let's talk about Augury's machine health since raising $180 million in funding.
You know, I mentioned we work with the largest companies, and what we've learned through the years is that the problem that we solve, machine health, is not just maintenance and reliability, it's a supply chain resiliency problem, right? It's a sustainability problem, a talent shortage, and upskilling problem. And you know, add to that the geopolitical tensions that we're living in, the environmental challenges that we're facing. I think the industry today understands that we have to fundamentally transform how manufacturing is being done, right? And as I mentioned, how do we bring AI and digital solutions to every single layer of the manufacturing stack? So what the funding enabled us to do in the past 3 years is not only continue growing our business, right? So today we're working in over 40 countries, as an example. We entered new segments with our partner Baker Hughes. We went into oil and gas and the energy sector. But on top of that, it enabled us to be bolder, right? To be that partner for our customers that helps them address the key challenges of AI and digital manufacturing in general.
Are there any specific technological advancements that Augury is focusing on to help enhance the production of health diagnostics?
Yeah, so you know we're always looking for ways to increase the coverage of how do we support more machines, more manufacturing.
Welcome back to NYSE TV Live, everyone. I'm Kristen Schuller here in the studio above the trading floor. Well, the NYSE recently hosted its annual Space Summit in New York, and companies are very keen to build in this sector. My colleague Trinity Chavez joins me now with a special guest to talk about the opportunity as former President Trump has shown his interest in the outer world in his first administration. Hi, Trinity.
That's right, Kristen. Dr. Neil deGrasse Tyson. He is a celebrated astrophysicist and author, and he's joining us today not only to talk about his latest book, Merlin's Tour of the Universe, but he's also going to be talking about the future of space policy, private investments, and the role of the Space Force. Neil, thanks so much for joining us today.
Thank you.
It's so great to have you.
But here with the
with the everything.
With the everything. Yeah, we love it.
So I do want to talk to you. Okay, we got your book here, Merlin's Tour of the Universe.
Yeah.
Talk to us about what your motivation was about writing this book and what inspired you.
Yeah, so Merlin is a fictional character from the Andromeda Galaxy visiting Earth. And I've used him as Merlin is an it. Used Merlin as a means to respond to people's curiosities about the universe. And I wrote a column, a question and answer column with that pen name. And that's the compilation of it. And in fact, it was my very first book. And I tested all these ways that I might teach people. And then I said, it's time to re-inhabit this character and bring him into the 21st century. And so that's what this is.
But how did you select these mysteries, these stories that you decided to put in this book and really develop Merlin's voice?
Yeah, thank you. That's exactly what happened. So I had a choice of 1,000 questions that the public had asked me. And I said, that's a good one. There's one that other people I know will want. And then when you cull them, they become these dewdrops of curiosity expressed by the public and replied to by Merlin. So Merlin's been around for all of time. You say, dear Merlin, I don't quite understand gravity. You know, Well, and Merlin remembers a conversation with Isaac Newton, and Isaac Newton answers it. Plus, Merlin's friends with Santa.
Yeah.
Very helpful when you're talking about the North Pole. Because all manner of things happen.
Course.
Earth rotates on it.
Yes.
And so, but it's a playful romp through very interesting and deep concepts in the universe, just to sensitize us all to the fact that the universe is our backyard.
Yeah.
And of course, space investments know this.
Yes.
All right. That you can invest on Earth or you can invest in space, and space is infinite.
Of course.
Yeah. So I think the more people feel like space is accessible to them, the more open they are to whatever opportunities it might bring.
Is that what you're hoping that viewers take away from this book, or do you have other expectations?
No, I want people to just look up and celebrate the fact that the human intellect, just what's sitting between our brains, but the sum of it over the centuries and the millennia, we've figured out the universe. There's still a long way to go, but we know what stars are made of. Did a twinkle, twinkle, little star, how I wonder what you are? No, we don't wonder anymore. We got that. Okay?
Yeah.
Okay, we've been to the moon. We've been to moons of Jupiter. We've passed Pluto.
Yeah.
We have a telescope observing the beginning of the universe. Oh, by the way, all these involve hardware.
Yes.
They're companies that make this equipment, these telescopes, and launch vehicles, and so it's an entire enterprise.
Yeah.
That extends our backyard from Earth's surface, the shore of the cosmic ocean, to the rest of the universe.
To the rest of the universe. I love that. But I do want to talk to you about, we're a day after Election Day. President Trump is set to take office as the 47th president of the United States. He was really behind spearheading the Space Force when he was in office previously, right? So talk to us more about Space Force and what you think we can expect as he moves into this administration.
By the way, the idea of a Space Force has been around for decades. I was on a White House commission 25 years ago, and I remember we chatted about that in committee, and people said, well, the Air Force has got this, because everything we think of as the Space Force today was basically a carve out from the Air Force. It was the U.S. Air Force Space Command. All right. So it's more sort of a geographic carve out of expectations and utilities and budgets than a brand new thing. So previous presidents could have done it, but Trump said this time has come. But it's not any different from the Second World War. We had the U.S. Army Air Force. The Air Force was part of the Army. And 2 years later, they split it out. The command and control is different. The engineering is different. The expertise is different. It made complete sense. And no one looks back and says, oh, that was a mistake. You shouldn't have done that. And today, we have ever-growing assets in space. Not just the value of the hardware itself, but the value of the commerce it empowers. The GPS satellites, originally launched by the Air Force, now under the control of the Space Force. There is no Uber without GPS. There's no tracking of your packages from FedEx and UPS and Amazon. No. So think about it. So if you want your Defense Department to protect you and your loved ones, you also want it to protect your assets. And our space assets are higher than ever before.
And I do want to ask you too, Elon Musk, SpaceX has obviously been at the forefront of many of these space initiatives that we have been seeing recently, but he's
highly
visible, but he's also been one of the major supporters for President Donald Trump, heavily campaigning for him in the last several months, as well as contributing $100 million to his campaign.
Lunch money for him.
So talk to me about...
Was that really a lot of money for him?
I mean, to many people, $100 million is a big chunk of change. But I do want to ask you what you think his role is going to be as this new administration steps in.
I don't know what he's been promised. There's something about efficiency officer. I don't even know what that means. But I do know that the country has embraced SpaceX ever since it began. And in terms of what role it has played in moving NASA astronauts, launching satellites in the commercial sector. And there's some mild controversies in and out of there, but you'd expect that with any enterprise that's never been done before and is large and expensive and the like. So I don't know that he'd be doing more in space under Trump than he would have under President Kamala Harris. Because he was already on a roll. I mean, it's not like he was hidden and now he's visible, and he doesn't need Trump to be visible. Right? I mean, he owns one of the largest social media platforms there ever was. So Trump visibility would probably be improved through him if you want to look at it that way. So yeah, Elon is reducing the cost of access to space. Very important feature of what it is to commercialize space. And by the way, you didn't ask, but NASA's budget is $20-something billion. The world budget for space is nearly $600 billion.
Wow.
So when we think of space, you think of NASA and governments. No, it is a free market enterprise going on right now.
Do you think we're going to see an uptick in space investment now with the new administration? Now, Elon Musk has been actually, at the forefront of these conversations.
Possibly. People might feel that it's safer to do so because Elon has got, the president has a direct ear to Elon, and Elon is a big player on that landscape. But that landscape has always been populated. Okay, you had Bezos and Branson making rockets. Boeing had rockets, and Lockheed Martin. All of these major, the space industrial complex is what basically fed NASA over all of these years. The rockets, the launch facilities, and by the way, NASA has 10 centers, very important, 10 centers in 8 states. And those 8 states variously go 5 blue, 3 red, 5 red, 3 blue, 4 red, 4 blue. NASA is distributed on our political spectrum.
Right.
So if someone likes NASA or doesn't like NASA, that does not tell you where they are in the political spectrum.
Well,
so NASA is a fundamental part of American identity. We went to the moon. Okay, you're here right on Wall Street, but it intersects Broadway where the ticker tape parades. And anyone visits here, walk Broadway. Walk Broadway. They're markers for the ticker tape parades. The Apollo astronauts, John Glenn, Scott Carpenter.
That's true.
So it is America.
It's America. I love it. America. Well, on that note, Neil, I think we're going to wrap that interview up. Thank you so much again for joining us. It's always a pleasure having you on the show.
Thank you.
Now I'm going to bring back in my colleague Kristen Scholler in Studio One. Kristen, I mean, what great things. I mean, just having Neil deGrasse Tyson here at the New York Stock Exchange above the floor, having this conversation. What a great day.
An incredible day, Trinity. Such a busy week for us here at the New York Stock Exchange. Of course, we are looking at the best post-election rally ever. Donald Trump decisively winning that race early Wednesday morning when it was called, and we saw the stocks rally in the wake of that. Record highs yesterday, record highs today, fractional gains across the board for the major indexes. Some repositioning of portfolios going on, but by and large, lower taxes, less regulation. That is favorable to these sectors out there. Now, on top of that, earnings continue to roll in, and we have a very important Fed decision on tap later this afternoon. In fact, this Fed set to cut rates by 0.25 percentage point at 2 p.m. Eastern, and that will precede a pre-planned press conference by the Fed Chair Jerome Powell at 2:30 p.m. Eastern. Of course, he will field questions from reporters as he always does, most notably in this case about the independence of the Fed in the wake of a new chief of staff in the Oval Office, a new executive, if you will, in Donald Trump. But we do see that the economy continues to drive growth in this market and earnings as well. And so what the Fed chair has to say specifically about inflation and about GDP growth, including the jobs report, will be top of mind for many investors out there as they look to build on this rally and continue to see the market rise to record highs really across the board. My colleague Trinity Chavez is still with us. We're going to sign off here. Trinity, great show today. Thanks so much to our viewers for watching.
Oh, good thing I didn't get up.
I'm reminded that it's not about the destination. It is truly about the journey.
My pleasure to greet you today from the center of the U.S. capital markets here at the New York Stock Exchange.
I want to just take a minute and not just talk to the people that are in the room, but I want to speak to the rest of the team around the globe. These are people that made this happen, and I know that there is no way we would be here if it wasn't for you.
Everyone at Flutter is proud to join such a distinguished list of companies on this great stock exchange.
Not many people get to do something big in this world, and we get to do something truly special.
This is such a wonderful place to both look back and look forward. Look how far we have come. I'm so optimistic.